Hey everyone, this is Robert Keens with goldsilverpros.com. It is Wednesday, January 20th, 2021, and we have had a breakout in the gold price. It's almost as if the gold market watched my video last night and decided it was time to start fairly valuing gold. We've had a breakout above both the 200-day and 50-day moving averages that we covered last night. We're going to cover that on the video, and we're going to cover how we've got more inflation showing up in the economy. You don't want to miss that. Let's go ahead and get started with the presentation. We're going to start off here at current gold prices as of about 5 p.m. Central Standard Time here in the U.S. Gold is sitting at $18.71. That's a $31 move today, and about 1.7%. Silver's moved to 0.46%, up about 62 cents. A nice little pop in both gold and silver. What we're really excited about. We talked last night, if you remember this chart, I talked about how gold had started its breakout. It started its breakout the beginning of December last year. It's come back down a little bit, fell back through its 50 and 200-day moving averages, but it's trading at 1870, which is right here, right above its 50-day moving average, right above that blue line. Let's shorten this up to about, a 2-month chart or so. So it's popped above its 50-day moving average and its 200-day moving average today, which is awesome news for the gold market. And I think that's because people are realizing that we're having some inflation. They're realizing what's going on with the bond market, and we're starting to see inflation show up. So very bullish news for gold there. Of course, silver bounced off its 50-day moving average. We showed yesterday at the close of the U.S. trading day, basically, or the normal business day yesterday, how silver was sitting right at 50-day moving average of support, and it has popped right back through it. The next resistance level is about 2650, this blue line here. We'll see if it pops this blue line right here. On gold, the next resistance line is about 1900, which is the previous high of 2011. We'll see if it punches through there. But good bullish moves in both gold and silver, which we kind of called yesterday. We thought there would be bullish moves based upon inflation and spending expectations of the new administration. This is the first day of the new administration, and gold is reacting and silver is reacting. They're doing what they're supposed to do in anticipation of what's going to happen in the financial markets. I found this really neat chart again at Nick Laird's site, Gold Charts R Us. These are the free charts, by the way. These you can look at yourself without having to have a membership. It's there for everybody as a CPI adjusted gold price. Now, to really understand what the true high is in gold, we don't just look, for instance, this chart. We'll back out on a 12-year chart real quick. If you want to look at a 12-year chart, the previous highs in 2011 is right at $1,900. That's non-inflation adjusted. It's not, in other words, taking into account the inflation of general prices in the economy as measured by the government statistic CPI. This chart measures it in CPI. So the previous high was actually not in 2011. That 2011 high in CPI adjusted terms will be about $2,000. But our previous high was in 1980, and it was equivalent of $3,045. That's just the CPI. We're not talking about real inflation. I don't think CPI really talks about real inflation. I think it only talks about government adjusted inflation. In my book, Drop Shadow, Chapter 2, I talked about all of the problems with government statistics. I spent 50 pages on it, dissecting it, but suffice it to say the CPI is not real inflation. But you have to at least, at the very least, use CPI to measure changes in prices to know whether you're hitting previous all-time highs. We have not in 2011, and again here in 2020-21, have not hit all-time high CPI adjusted for the gold price. Neither have we hit it for the silver price. The 1980 high in silver was also much higher than what we saw in 2011 or here in 2020-21. It was $140.85 equivalent in today's dollars. $140.85 according to the very conservative and not really accurate CPI. So we're nowhere near all-time high CPI adjusted in either gold or silver, but you can see these cup and handle patterns. Now in gold, you kind of have a double cup and handle. And I would argue that there's sort of a big cup and handle here and then a small one forming here. This is the one right here that I've been talking about all year, this cup and this little retracement handle. But if you, which you can see here, the non-CPI adjusted chart. But if you go to a CPI adjusted chart, this is the mini cup and handle. This is the big sort of cup and handle. Now, in 2011, because of inflation, because of rampant money printing, which has gotten progressively or exponentially worse over the years, we never actually reached the previous high of 3,045 in the gold price, CPI adjusted. So it didn't really form a full cup, but you can see here, it's almost a cup. And then we came down, we had this retracement, and now gold's back in a bull market. So depending on how you want to look at cup and handle formations or technical formations, this is another bullish indicator that gold simply is recovering to where it should be. And it's going to continue to go forward past the 3,045 CPI adjusted. Looking at silver, if you look at CPI adjusted, we have sort of a cup and handle here as well. You got this cup, which really didn't finish, which means silver never really reached its all-time high, its potential, and it sort of did this handle formation. Now it's coming back up. Now, those aren't as strong technical formations as the cup and handle formation we have here, which is a more perfectly formed cup and handle. But again, bullish on both the gold and the silver price. Now, we're going to look at shadow government statistics, alternative data on gold and silver here in a moment. In fact, I'm going to go to John Williams' site. Now, John Williams has been running shadow government statistics for a long time. I've had him on the program. It was 3 or 4 months ago. We had him on the program talking about his data. And he's a very nice gentleman. What he does with Shadowstats is he takes the older versions of government statistics, not only CPI, but a bunch of them. If you go up here to alternate data, he does it for money supply, unemployment, inflation, CPI calculator, GDP, and the dollar. Here on the CPI or on the inflation, consumer inflation page of his website, and this is all free, it doesn't require membership, he uses the 1990 based alternatives to calculating these numbers here, and then the 1980 based here. And you can see that his inflation numbers are higher using that. Why does that matter? Well, back in 1980 through 1990, and actually through today, the government's made a lot of adjustments to their statistics. Specifically CPI, they started doing substitution, hedonics, geometric weighting, some of these other mathematical modifications to the overall statistic to modify how much inflation was actually showing. And there are some conclusions that they made as to why they did that. But at the end of the day, they modified the calculation. It's like you take a mathematic formula and you say, we're going to use this mathematic formula, x plus y equals z, for 20 years. And then we're going to change it to x squared minus y to the 5th equals some other number. Let's say ZA or something like that. It doesn't matter. You're changing that calculation. When you change that calculation, from the time that you change that calculation, you cannot compare apples to apples, that new formula to the old formula, because you've changed the formula itself. So when you get the result of your calculation, they tend to be skewed by the formula that you used. So what John Williams does on consumer inflation on his site is he backs out all those adjustments and just uses the old formula. And that allows you to compare inflation over time. It allows you to compare inflation, back from pre-1980 up until now. And so you see that his CPI or consumer price index are much higher. So if we go back and look at this chart, why does that matter? It means that the actual 1980 high, if you use the SGS, which has a higher inflation rates from 1990 and 1980 calculations, would probably have this 1980 highs higher than 3,045 in gold and higher than $140.85 in silver. So as it happens, Nick Laird also has these charts on his website. Again, this is in the free section. You just go to Gold Charts R Us and you look in the free statistics section to find this. Now, if you use John Williams' shadow stats calculation, the 1980 high for gold is actually $20,924. No, that's not a misprint. $20,900.24. And for silver, it's $966.77. That's why some popular pundits in gold and silver are saying we could get to $20,000 gold and $966 silver, or $1,000 silver. That's why, because if you use the standard inflation calculation the government's been using basically since early in the 20th century, and you don't make those adjustments, hedonics, geometric weighting, all of those, so on and so forth, and you just use a straight calculation, that means in today's dollars, gold all-time high was 20,924. So we're sitting here at about 2,000. That's a tenth of the previous all-time high when we consider what he considers real inflation, what I also consider real inflation. And silver would be 966.77. So we're all the way down here. In fact, we're basically at an all-time low for silver back to 1720. These charts go back to the year 1720. That is 280, almost about 300 years now. 300 years of data, silver is sitting at really almost an all-time low price. Because if you look at silver inflation adjusted here, you're sitting about $11 in today's dollars. Now about, $26 or so. But if you if you roll back inflation all the way back then, in 1720, silver was sitting at $500 an ounce in today's dollars, and gold was sitting at, about $10,000 an ounce in 1720. So if you use a real or a more accurate inflation adjustment, you start to see how much the precious metals are undervalued. So far we have seen a hockey stick move in the overall M1 money stock as printed in the US dollars in 2020 as a result of the shutdowns. As a result of the shutdowns, they printed a bunch of money and a hockey stick. So here you have the gradual increase, then you have a faster increase, and then it goes exponential at this point. This typically signals near the end of a fiat currency life cycle. So we think we're near the end of the dollar life cycle. I think this can actually go up a little bit more, maybe another year or two or so before it dies, but we're in those end stages. So we've seen this hockey stick uptick in the amount of dollars printed. But have we seen it in the gold and silver charts? If we do non-inflation adjusted, just look at the dollar price, we have not seen this hockey stick. Yes, we did see an increase, but that was to previous all-time highs, okay? Go back and look at the money data. If you go back and look at 2011, when gold reached its all-time high, the money stock in the US had just started its upward move. It's gentle slope. Wasn't reflective of this vertical move and certainly all this movement in here. If you look at 2011, you're sitting in a money stock of, the all-time was around September 2011. Let's see if we get there. You're an all-time high of about $2 trillion printed. Now you're sitting here at $6 trillion printed. So the money stock, the M1 money stock, has gone up by a factor of 3x. The gold price has not gone up by a factor of 3x. In fact, it's sitting right at or just below its previous high in 2011 at 1900. Now it's at 1871. So gold hasn't even recovered to its 2011 price, while the money stock in the US, the M1 money stock, has tripled in that same time frame, the last 9.5 years. Okay, same thing with silver. Silver hasn't even recovered. We'll go back to the long chart on silver. Go back and look at the long chart. If we look at the 2011 high, silver touched 48.49, kind of, I think, briefly touched $50 on the futures market. It hasn't gotten anywhere near there. It's about half of that right now, slightly half of the price of what it was in 2011, while we've tripled the money stock. So that inflation of the money supply, while I showed you yesterday, is starting to hit bonds a little bit and starting to hit, I showed you earlier where it's starting to hit commodities in a video about a week and a half ago. It hasn't hit the precious metals yet. So the precious metals are undervalued. So any way you want to look at it, they're undervalued. If you go to the SGS, the Shadowstats inflation adjusted, it's extremely undervalued. Even if you go to the modest CPI adjusted gold price, it's extremely undervalued. And we know that CPI growth rate has been much lower than the monetary inflation rate itself. So if we consider all of the pent up potential for the gold and silver price to rise, if all of these circulating dollars start to increase in velocity and start to bid up all the prices of goods and services, gold and silver have a long way to run. Now, let's suppose you don't believe in the CPI or the Shadowstats Index. Well, now we have another one called the Chapwood Index. This has been going on for quite a while. What Chapwood does is they take an index of 500 items. I think they used to do 4,000, but they focus now on 500 items that people use the most. And they check the prices over time in all of these major cities. So we're just going to show the top 10. You can see the 5-year average increase, or the 5-year inflation rate of prices, not of the money supply, but of actual prices in these top 10 cities is up 11.9 in New York, 12.1 in Los Angeles, 11.1 in Chicago, 9.2 in Houston, 11 in Philadelphia, 8 in Phoenix, 9 in San Antonio, 11 in San Diego, 9 in Dallas area where I live, and 12.9 in San Jose. And just since 2019, 12%, 2016, 10, you can see that these prices are averaging about 10 to 11% inflation year over year in these top 10 cities. Let's go to the top 25 cities. Look, you're still getting 5-year rates in the double digits, the high single digits and the low to, well, not quite mid double digits, but about 12.9 is a high here, 12.3 in Seattle, 12.9 in Jacksonville, 11.6 in San Diego, so on and so forth. So the Chapwood Index is measuring real prices of real goods every day, the 500 ones that are most used in the economy, real price measurements, not an adjusted using Shadowstats, which I think is highly accurate, but just simply using real prices. And it comes out with about the same inflation rate that John Williams of Shadowstats does. So if you want a real world measure of how well John Williams of Shadowstats is doing his calculations, a real world measure, the Chapwood Index, basically confirms his methodology. In other words, the 1980 method that the US government used of assessing inflation is better than the one that we use today, because that's shown in real prices through the Chapwood Index. And just to give you a little bit more information on the Chapwood methodology, they use 4,000 items, but they focus on 500. If you want to see the 500, you click on this link, it'll show them to you. Here's some of the ones in the index, okay? Different memberships, prices of goods and services. But if you want to go in detail, hit the 500. These are the 500 products they measure. That's a pretty good idea of what the average person, okay, regardless of where you are sort of on the spectrum of income, is going to see their prices rise. So the Chapman Index is a real world measure. And you see high single to low double digits over the last 5 years. That coincides with what we see on John Williams' Shadowstats. And so that would seem to indicate that these gold and silver indices are indicating that we're nowhere near real-time highs. These are more accurate indices even than the CPI ones. So the CPI ones, the very modest government modified ones, or the government screwed around ones, are basically saying we haven't hit all-time highs in gold and silver inflation adjusted. But then if you go to what we consider real numbers, it's extremely low. So this is the room to run for gold and silver when the economy starts crashing, when the deflation really hits. We had deflation in 2020, but I'm talking when it really hits. These are your upside targets for gold: 20,000 for gold and 966 for silver. And that's assuming the problems are only as bad as they were, say, in 1980. I think the problems are much, much worse when you look at monetary creation, debt, derivatives, all of that good stuff. I don't think there's much to argue with there. So there are your upside targets of both gold and silver. And I think the market has started to grasp that with the new administration coming in, increasing the spending, not blaming this all on the new administration. All of this has been done back over time. Because we talk about inflation, the inflation's occurred since back, the 1980s. So we're not just blaming the current administration. We're going back years and years and years. In fact, if you want to go back to the starting point, it's 1913 when the central bank, the Fed, started in the US. So we're not blaming the current administration, but the current administration is going to continue higher taxes on corporates, continued inflation of the money supply and spending. And I think that's why gold's reacting. It's reacting to it. It is no surprise it's reacting on the first day of the new administration. You're popping gold and silver. Now we're up $30 in gold, okay? So you're starting to see that. But it doesn't stop there. An article on Zero Hedge, you can see the URL here, was talking specifically about hot rolled steel. What is steel used in? I don't know. Buildings, infrastructure, just about every darn thing. We have tripled in 2020 the index from about 440 to about 1080. We've reached all-time highs in the rolled steel index, well, at least dating back to the previous highs in 2008 before the last big crash that we had. So we've recovered those, meaning we have inflation in one of the major components of infrastructure. Okay, what happens when you have a bunch of government spending? You have a bunch of infrastructure programs. What happened during the presidential debates? The Democrats said they want to spend on infrastructure. What's China doing? Building infrastructure. What's Russia doing? Building infrastructure. The Belt and Road Initiative. Okay, they're building infrastructure. That's why steel is starting to ramp up. That is one of the canaries in the coal mine for coming inflation. Steel. You're telling you right now, inflation is coming. This is a measure of it. So I went and looked at the Bloomberg Commodity Index total return over the last 5 years. So we had a big fall down in 2020. We've recovered to where we were pre-2020. So that means we had this really sharp fall over like a month or two of the commodity index when the shutdowns first began in the US and basically across the world. And then the price has slowly crept up over the last few months. This is inflation and prices across the broad commodity index. So we're back where we were, in 2019. We've recovered to about the same level we were in 2019. And if this trend continues, we're going to pass right through it. Why? Because we're getting all that spending. So expect the increased spending from all of these countries trying to restart their economies after the shutdowns to continue to drive up commodity prices. What happens when commodity prices go up? The prices of goods and services go up, as shown in the Chapwood Index. We're going to see these rates rise. You're going to see these rise in the short term. And we haven't even talked about all the money already spent that's sloshing around in the system. This is where you're going to see rising prices. Now we have the S&P GSCI index is another measure of commodity prices. We started to see it year to date in energy. Now, year to date, we're talking January 1 to now, about 20 days, right? We've already seen oil go up almost 10%. That's almost double digits. Brent up 7.53. Gasoline up 8.72. If you've seen higher prices at the gas station, I certainly have in January. Heating oil up 7.47. Some of that has to do with the winter season, but still 13.75% on ethanol, 16% on naphtha, 36% on propane. Give me a break. So the energy prices are coming up. Now, we have had some things go down like palm oil, a couple of things, 25% up on rubber, down 20% on lumber year to date. I had previously shown in my last video on commodity price inflation that lumber had gone up like 100% in 2020. So this 19% down is a modest retreatment, believe me. 7.6% on rice, 7.6 on corn, some foodstuffs. So we're starting to see prices, but infrastructure spending right here, hot rolled steel, boom, that's where the spending's coming. So essentially expect more price inflation because of all of the money sloshing around in the economy that hasn't really come yet. In the additional spending coming behind that with the new administration, they've already pledged it. It's coming. And so these are your price targets for gold and silver, I think. These are your upside price targets, 20,000 in gold, 966 in silver. If you want to be extremely conservative and use an extremely modified number like the CPI, then it's 3,000 in gold, 140 silver. Those are the conservative ones, guys. The conservative ones. So that's what we're going to see. We're going to see price increases in 2021 because the administration wanting to spend, but the rest of the world spending, as we've seen in these commodity indexes, they're starting to recover. That's not just US spending, that's world spending. It's coming. It's the printing of the euro, printing of the yuan, printing of the pound, printing of the dollar, printing of the rand, printing of everything. It is coming in 2021. So we're going to see gold and silver to continue to march up. And those are your price targets. Okay, I want to take a moment now to refresh you guys. Last night, I'm actually going to refresh this screen. Last night, we had 7 people joining my free conference, January 28th, Central Standard Time. It runs from 11 a.m. to 9 p.m. When you go to the site, hopin.com/events/solutions 2021, it'll give you your local time here. This is my time, Central Standard Time here in Texas. We had 7 people. Those are basically insiders. I let know that the conference was going to be going on January 28th. That is next Thursday. That is a week and 1 day from today. And in 1 day, we've added 132 people. We're marching toward about 12 to 1,300 people. You guys want to get your ticket in as soon as you can. It's free, by the way. I'm paying for this conference by myself. I did pick up another sponsor today, but so far, I have paid for the conference and it's not been reimbursed, but that's okay. I don't mind. I'm doing this for my attendees and my subscribers and my viewers because that's what you guys wanted. I'm going to do it. We're going to talk about Solutions 2021. This is free for you guys. Come register, tell your friends. We're going to have an amazing schedule. We're going to talk to Fernando Aguirre. Many of you guys know him as Furfall. He has a massive YouTube channel, about 60,000 subscribers. He has a website. He's written books. He was a survivor of the Argentina currency crisis in 2000. And he is going to tell us about currency crisis, how to survive those. Again, all you have to do is look at the money printing. Do you think we're about to have a currency crisis? If you do, come to this session. You want to be here. He's going to tell us what to expect and how to defend against it, how to prepare ourselves from it. We have Dr. Scott Craig of the Silver Independent, one of my favorite new precious metals voices in the world. I met him in Austin a month or so ago. We sat down, had drinks, had a wonderful conversation. He is an absolute wonderful man. He has a doctorate in history. He's going to talk about an historical perspective on our financial troubles and our monetary troubles here in the U.S. You don't want to miss that because remember, history repeats, or at least it rhymes. And if you learn history, you can have a good idea of what's coming going forward. We're going to have Andy Schechtman talk about silver demand responding to political chaos. Well, is silver demand responding to political chaos? I don't know. Look at the price. I think both gold and silver are, no matter what side of the political spectrum you're on, you're seeing the precious metals rise through the change of the American administration. We're going to have James Anderson, SD Bullion, come and talk to us about the case for gold and silver in your portfolio. If you have watched the content on SD Bullion, the blogs and the videos, there's no one like James. His research is absolutely fantastic. I learn something from him every time I watch one of his videos or read one of his blogs. They're absolutely amazing. Bitcoin risk versus reward. We're going to have a very special guest on. Karian Von Hest also goes by Dezo Games, has been following both the precious metals and the cryptocurrency market. He's what I consider one of the most underappreciated, but the smartest voices in cryptos. He's going to come talk to us about Bitcoin. I'm going to be talking further about the gold Ponzi unraveling. Those who've been following my LB May and my COMEX videos, We've got Alex Newman from Liberty Sentinel coming to talk to us about how to find good, actionable information. We've got the tech traders, Christopher Mullen, coming to talk about managing financial risk. We have Jerry Huang, CFO of Impact Silver, and principal at Gemini Capital, talking about mining stocks. And we will give examples. If you guys want to talk about examples of mining stocks, come to this session. I'm telling you, Jerry is one of the smartest guys I've ever met in the mining sector. That's why he's coming to my conference. This guy will blow you away. Preparedness is a way of life. Maybe, well, I shouldn't say this, but maybe my favorite, or at least my most anticipated session coming up is Daisy Luther, the organic prepper. She runs a prepper site after having to learn how to prep because she had some financial struggles. She lost 2 men in her life, her house, her car, a lot of things happened to her, and she learned how to build a sustainable life. She is the perfect person to talk to about how to prepare for what is upcoming. Guys, come join this conference. It's free to you. It is at hopin.com/events/solution 2021. Nothing, doesn't cost you anything to register. We're going to take registration up until the day of the conference. So you have about a week left. Go ahead and get your registration in. So to recap, it looks like gold and silver have responded to what we were talking about, the bullish catalyst we were talking about last night on the program, the coming inflation in the bond markets, the coming inflation, well, the existing inflation in the money supply, plus the additional inflation that's coming, and the inflation on key indicators in the commodity index, which is raising prices. We're seeing that. And I show you today some common sense upside targets for both gold and silver, and some really interesting upside targets for gold and silver if we really want to get down to honest measures. I think that information will be very instructive to you guys about what the potential is for the gold and silver market when we start to see this currency crisis, which we believe is coming. I wrote a book about it about 11 years ago. I think we're finally there. I think it's finally coming. Don't have a lot of time to prepare, but you guys are interested in preparing, getting good information about that on investments, on managing risk, so on and so forth, come to the conference. Guys, that's going to wrap it up for today's video. It's been my absolute pleasure. I've got more to do this week. I promised you guys I would give you an update on the LBMA COMEX. I'm going to do that. We're going to clarify some things I said earlier and dive a little bit further down into that. I'm doing some research on that. Look for that towards the end of the week. I will do that this week, I promise. And at the conference, remember, I promised last night, I'm going to talk to you about where I think the global monetary system is going. I'm going to draw you the big picture. I've hinted at it in videos leading up to the conference. Over the next week, I'm going to be adding some pieces that I have not talked about. Stay tuned for that new information leading up to the conference. But on January 28th, I wrap it and give you the big picture at the conference. You got to join for it. It's not going to cost you anything, but it's going to be a hell of a lot of fun. Until next time, guys, this is Rob Keens with goldsilverpros.com.